Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:15 p.m. that is Central Time. Today is June 26th. Well, I thought we'd kick off and look at the 10-year yield today because it's up to 4.3%, but that's a fairly dynamic move, particularly in view of the very inert trading we've had over the last week. So a little bit more credit being given to the view that interest rates aren't going to be coming down anytime soon, even if there's still 2 interest rate cuts priced in by the end of the year. Then gold responded to that move in the bond market. It was down about $20. And then Bitcoin was also down about $1,000. Now, that's not as much as it was up yesterday, but it's certainly also reflecting less risk appetite in the stock market, where the majority of stock markets were relatively unchanged in here today. Now, but still in negative territory. Where we did have some more dynamic moves was in Australia. The ASX was down 1%. So this also helps to emphasize that we're still in quite a choppy environment for the major indices overall. Then the Japanese yen broke lower to another new low, and this is amid increasing I think worry or hopes that the Bank of Japan will intervene to support the currency. But I suspect that unless inflation is running rampant when PPI is reported, they're not going to be in any hurry to support the currency because Japan wants inflation. Then Chinese government bond yields were also at a new low today, which further emphasizes that there is a lot of angst about the health of the economy. Then in the commodity markets, we had a big upward dynamic in coffee prices yesterday, but then it came back down again in here today. Sugar does look like it's starting to attract some attention, and it's from a reasonably depressed level. Then orange juice looks like it's starting to roll over. Now, when we think about the oil market, it's still locked in this range, but it's a range where you have certainly a tightening of the trading band, and there's a sequence of higher reaction lows, there's a sequence of lower rally highs. And when we eventually get a catalyst which will knock the supply-demand argument out of equilibrium, then we're likely to have a substantial run on the upside or the downside, depending on which way that catalyst goes. But it does look increasingly likely that we're getting to a point where a catalyst will become apparent. So certainly there's plenty to think about in terms of the chart action, and